Time now for the market report. Zach Ashmore in studio with his usual deeper look. And the WASDE report just in.
Thanks, Mike. We'll get to the WASDE report in just a minute. But first, markets taking a small downturn last week, but not by much. This time of year, people are looking to the future, and speculation on what's to come leads the numbers. Let's take a look. Last week's biggest loss, lumber finally seeing prices fall for the first time since mid-January. Looks like supply is finally catching up. Last week's biggest gain, soybeans, a gain of 29 cents. As you can see, corn and wheat down. So what's the deal? I sat down with Extension row crop economist Will Maples to find out. So Will, grain crops have seen a spike in prices recently, but just last week both corn and wheat are down while soybeans keep rising. What's causing this and how long will it last?
So those price movements we saw last week with corn and wheat being down, I think were just more of a short-term effect to some things we saw in the market happening last week. Long-term, I don't see that really sticking. If we look at the markets right now, how they are, U.S. exports, grain exports are still really strong. We have historically high sales to China still. And on the soybean side, is even kind of a better outlook with exports due to kind of the slow start of Brazil's export season. Brazil has a lot of kind of complicated weather issues going on right now, with northern Brazil being very wet. That's really kind of slowing down their ability to get soybeans harvest. So overall, the export picture looks very strong. That's going to really even out any kind of price drops we saw last week going forward. The only thing we need to really kind of keep an eye on as far as this old crop's concerned is if we start getting too high of a prices, that could internationally make our beans and corn a little bit more expensive and turn focus more towards South America as far as exports are concerned.
As you saw, soybeans up and going. No word on when it'll stop. Maybe this week, maybe next. But this isn't without reason. China's buying, Brazil's harvest up in the air, and U.S. acres unknown. Market analyst Sean Hackett fills in the details.
When you're dealing with 120, 130 million bushel carryout, every little tiny adjustment either way makes the market go up 50 cents. So very, very hard from one day to the next to know which way the market's going to. Oh, the weather's a little bad. Now the weather's actually good. Demand was a little disappointing, So we just think we're stuck in a very volatile sideways trade into the springtime on soybeans. We don't expect this pattern to really change until we get further in and see what kind of acres we actually get planted here in the U.S. A drought, of course, would help, but the way our natural climate cycle algorithm is projecting, we're seeing a drought and a hot, dry pattern mostly into July with August backing off. That means corn could get in a lot of trouble with yield, but soybeans could get bailed out. Soybeans could rally on the worry, but we think the actual crop problem could be in the corn market. So we think the corn market could drag the soybean market up, not the other way around this time. We already know South America is going to be probably not top end. We don't know how far below top end, but it's not going to be the bin buster crop we had last year. So everybody wants a big U.S. crop. If it looks like that crop's going to make it, then they'll back away and saying all is well. But if it looks like we're going to come up short, as we believe we are, then they're going to pedal to the metal again and really, remember last year exports picked up in August when they realized our crop was going to come up short. That could be another month for a trigger for them to come back and buying aggressively again.
This month's WASDE report just dropped. Not many changes from last month, but that appears to be normal this time of year, at least according to Will Maples. Let's jump in.
U.S. wheat mostly unchanged. White wheat exports raised. Hard red winter exports lowered. Season average farm price unchanged at $5 per bushel. Global wheat outlook is for larger supplies, increased consumption, higher exports, and reduced stocks. Global production increased, mainly on higher Australia production. U.S. corn supply and use outlook unchanged from last month. Projected season average farm price is unchanged at $4.30 per bushel. Global outlook is for larger production, increased trade, and greater ending stocks relative to last month. U.S. rice projection unchanged from last month. Projected prices for both long grain and other states' medium and short grain are both raised this month to $12.40 and $12.80 per hundredweight. Global outlook is for slightly larger supplies, higher consumption, nearly unchanged trade, and reduced stocks. U.S. soybean supply and use projections for 20 and 21 are mostly unchanged this month. Ending stocks remain at 120 million bushels, down 405 million from last year's record. Global soybean supply and demand forecasts include higher production, exports, and ending stocks. Argentina's production reduced 0.5 million tons due to dry weather conditions over the past month. 2021 forecast for total red meat and poultry production lowered from last month. Fed cattle prices unchanged from last month. Milk production forecast lowered slightly from last month. Annual cheese price forecast unchanged from last month as well. U.S. cotton forecasts show lower production, consumption, and ending stocks relative to last month. Projected marketing year average price up 1 cent from last month. World cotton supply and demand estimates show lower production and ending stocks compared with last month, but higher mill use and trade. World ending stocks forecast 1.1 million bales lower than last month at 94.6 million bales.
And that's it for a deeper look into the markets.